If you're planning to run the wheel strategy in May 2025, you're definitely going to check out these stocks as potential setups. Yo, what is going on, Premium Chasers? I hope you are having a God-blessed day. Today, every single person that comments down below is going to get my leveraged ETF playbook specifically for option sellers. A lot of you asked me about how to do this whole thing with leveraged ETFs. I'm going to show you just that in this free guide. Just drop a comment. I'll personally respond to your comment with that playbook. And while you're down there, hit that like button, hit that subscribe button, because I'm dropping the heat for you today. We're going to be showing you the five really best setups that I believe are fantastic for May. All right. And these really fit really nicely into the quad option strategy. So whether you're new to the wheel strategy or you're just getting started with it, you're in for an amazing journey, because I believe it is the best trading strategy that doesn't require you sit in front of screens all day, right? It doesn't require you to day trade. And surely we are no options buyers. We are option sellers collecting the juice from those option buyers. So let's get into it. All right, let's cut the fluff out. All right, first one is Realty Income. This is one of my favorite quad option strategy stocks, right? If you don't know, they offer a fantastic dividend, which is the cherry on top, right? Because now we're able to do covered calls, we're able to collect a dividend, 2 income streams just from that, as well as the cash secured puts. If you're planning to actually get into it, you're going to get some premium from those silly options buyers as well. So why am I paying attention to Realty Income, right? Because even though a lot of the market has kind of had a nice juicy rebound, Realty Income is still right below its 200-day moving average of 57, just slightly, right? So what I'm watching for is I'm watching for us to either one, drop back down below our 300-day moving average, or just looking to do cash secured puts. Why? Well, because I believe Realty Income at these levels is a good value, right? I personally believe that. You're going to have to go build your own conviction for stocks as well, and why you do something. You shouldn't be getting financial advice from YouTube videos, right? But for me, I love this stock because number one, I can get into it and get cash secured put premiums up front, right? And then if I'm assigned, I'm going to be collecting that dividend as well as the covered call premium. I'm kind of manufacturing a dividend for myself on a monthly basis. So let's go take a look at some of the examples right now. So obviously, guys, premiums are all relative to the time, obviously at the time of recording. So your chain will look different. So, for example, even if we go look at the puts 15 days out, right, we could see, even at 55s, they're decent right now. Obviously, a lot of these dividend paying stocks, right, they're not necessarily, you're not going to be getting some insane premium returns, but it's still better than nothing in my opinion. So for example, here we're collecting $30 in premium. Let me toss this into our calculator. Everything here is free that you're seeing on your screen. All the calculators are free inside the Facebook group. Link will be in the description. Join us. It's a vibe in there. Introduce yourself, post your questions, right? Mastermind network with other people. That's what it's all about. All right. So our collateral on this would be $5,500, right? So about a 0.5% premium return in about 15 days. Listen, I know I show you guys other kind of juice plays, right? But the thing is, right, you don't always go after those insanely higher risk plays, right? When you're getting like 8% return on your money, like you're getting into a little sketchy territory. A stock like Realty Income, right, for the most part, it kind of trades sideways. And that's a good thing for option sellers because it's, quote unquote, a little bit more predictable with our cash secured puts, our covered calls, and we're getting that little cherry on top. Definitely recommend mixing into your portfolio some of the safer stuff, guys. I see a lot of you guys posting your wins in the community, and like some of the stuff y'all are touching, I'm like, what are you doing, man? Like get some, I don't know, man. You do what you want to do with your own money, but for me, it's a little bit sketchy. Some of the plays. I'd rather be slow and steady. I'm that turtle, right, over time, right? But we all got our own strategies. You do what you got to do. So that is the first one, Realty Income. I am paying attention to for cash secured and covered calls. Next one is another one of my favorite, has been absolutely beat down, and that is T. Rowe. Also offers a fantastic dividend. You're going to see a common theme with me, right? I love doing the wheel strategy and quad options on dividend paying stocks, right? Because it's adding extra income. I'm potentially collecting 2 to 6, 7, 8% on some of these dividend paying stocks a year. in addition to my covered call premiums that I'm collecting, right? Over time, that really adds up. That's why you guys, I always tell you guys, I don't like doing the whole buy and hold strategy unless it's just funds. Buying, holding individual stocks, you can really like manufacture dividends for yourself, right? Sell them, get into some, and you're collecting premiums both directions. I really like T. Rowe at these levels because we are well below the 300-day moving averages. You can see our 300-day moving average is at 110. Our 200 is at 107, trading right in the middle Bollinger Band of 89, right? Still a decent setup, in my opinion, for cash secured puts. Now, what I usually teach here on the channel, right, is I usually say, hey, wait till your for cash secured puts when you're towards the bottom Bollinger Band, right? You're going to get better strikes and you're going to get better juice, right? So even though this isn't a great setup per se, right? Like we saw this kind of like support level around 80, right? Which isn't far off from 89, but because we're so far below 200, 300-day moving averages, I'm a little bit more comfortable when I see those kind of setups to still do cash secured puts, right? So let's go take a look at what kind of premiums our option sellers are able to collect right now. So we're going to click sell a put. And we'll go out, we'll keep that 15-day expiration here as well. And you can see they're a little bit better. Now, of course, you're not going to be able to, and again, you could do the 75s for sure, right? But the thing is, like you saw, we had a support level at 80, right? So the 75s are less likely to happen, right? So we would only collect $15. Now, that might be good for you. That might not be good for you, right? For me, I want to have a good premium return as well as not being upset if I'm assigned. A lot of you... Listen, I have to say this every single video because it's crazy. Some of you are just doing cash secured puts and then you're like so nervous that you're going to get assigned. I'm like, well, then you shouldn't be doing it on that stock, fam. What you doing, right? Only sell puts and calls and do this whole thing on stocks you actually don't mind owning, right? Like the point of it is to dollar cost average at better prices and get paid up front, right, from the options buyers, right, into stocks we actually are bullish on long term, right? So this is what I'm saying. Like you got to be okay getting assigned, guys. So, 80s and 85s are very nice. Obviously, 85s, we're collecting about $115 on that, right? So let's take a look at what that looks like. $115, $8,500 in collateral, a little bit more, right? We're getting about a 1.35% return on our money in about 15 days. Now, T. Rowe obviously is a lot more, volatile of a stock. If you've been in T. Rowe for any amount of time, so you would know that. Let's move on to our next one. Is Qualcomm, ticker symbol QCOM, all right? QCOM, right? This is one of my favorite companies. I've traded this one for many, many years, but I love it because, again, I'm looking at a lot of... So, look, because the market has rebounded kind of pretty heavily here from April. Like, April was awesome the first, 2 weeks. I don't know. Everybody was running scared. We were just, just collecting the juice, right? So... now we're kind of have this rebound. So I'm looking at the opportunities that still haven't really recovered. And I'm primarily doing that on dividend paying stocks, right? And kind of loading up on that because I do believe all of these companies, in my opinion, will recover past their 200 and 300 days moving averages, right? So QCOM just had earnings. They weren't, terrible by any means. But we did see the stock sink today, down 8%. So it got on my radar here. Dropped from around 148 around yesterday down to 135, right? And it's one of my stocks on my watch list. Hey, when something is dropping 8%, I'm paying attention to it. You could see we had about a support level around 124, which is only about 10 off the current share price. Let's take a look at the premiums. The premiums should be very, very nice for this. So when I'm looking at it, I'm looking at that support level, right? I'm looking at that 124, 125 for these, and obviously making sure that, we're getting compensated decent premium. You could see really not, right? Where it's only $7, right? Oh, actually, sorry, I didn't tell my expiration. So if we go 36 days out, which I usually like to do, 30, 45 days out, you could see we'd collect about $230, $229 in premium at that support level. And then we have a pretty drastic jump, about $100 less premium collected at the 120s, right? So 125 is kind of that support level. 120, it never got down to, especially in the beginning of April. So, it depends. Like, what's the rate? Obviously, a 125 has a higher chance of assignment versus 120 if you actually want to buy it. Obviously, 125 is a decent support level. Let's go take a look what that premium looks like. We collect $230 up front, but we obviously need a little bit more of a collateral, so $12,500, right? And about a 2% return on our money in about that 30-day time frame, right? So again, I am paying attention to QCOM here because of this massive drop. Just stay patient, right? Don't listen. We are, as option sellers, we are paid to be patient, right? Don't force trades, right? Just like literally wait for the setups to come. This is why, as you build out your core watch list, those 5 to 7 stocks that you really like, you can really, just hone in on those, right? Because if you're just jumping from stock to stock, right, and like following earnings and news, like, dude, it's a full-time job, man, and we don't want that, right? We want to fit this strategy into our lifestyle, right, and only trading a handful of times every single month. Next one I am looking at is Pepsi. All right. Pepsi, I love this company. Again, I've mentioned it probably the last few weeks here, but this is probably one of the best setups that I've seen, well below 200 and 300-day moving averages. We're trading right around where we were in the beginning of not April, but when we had the big pullback at the end of April, for them at least. They kind of been getting slaughtered from obviously everything they're going to need to change with their ingredients in their products. But I do believe they're going to do it, and then they will recover. Great dividend paying stocks. Let's take a look at what some of those premiums are looking at like, because we've been kind of just bouncing around that 134 level all week. So let's take a look at some of the puts. Great setup, though. Obviously, we're right at that bottom Bollinger Band. We'll just keep it congruent with everything 36 days out. You can see these are some juicy premiums, right? For me, when I analyze a stock like this, that is kind of in a it's kind of in a free fall, right? We're struggling here with Pepsi. We could see we hit around 133, 132, kind of was our lowest, right? I then will literally go out like 5 years and see like, hey, when is the last time that we were around those levels? And that was basically in March 2021, right, when we had a big drop from the 150 levels, right? So that to me, from 2021, it hasn't hit it. That's like a good setup, man. That's a really nice setup. So, looking even at the 130s, right? About $216 in premium being collected. Let's see what the delta is actually on that. About 0.30. So hit the nail right on the head. About a 30% chance of assignment, 70% chance of no assignment, and just collecting the premium. Moving on to our last one, similar to Pepsi, is Coca-Cola. I'm watching this one as well. We did see a big drop at the start of that month when it dropped down to 68, right? Coke doesn't move very much. This is something that I may consider doing at like iron condor strategy, because we are really just kind of right in that middle. I mean, we're right around that top 72, bottom around 68, and it's with an iron condor, we're kind of just betting on the fact that something just moves kind of sideways. But if we do see any kind of pullback, I would love to be getting into Coca-Cola around those 200 and 300-day moving averages. Guys, don't forget, drop a comment. I'm going to send every single person that comments down below our leveraged ETF playbook. This is going to show you a smarter way to do leveraged ETFs and not blowing your account up. So if you want that, drop a comment. And if you are somebody that is interested in our 1-year incubator, this is a more hands-on approach where we work in a one-on-one environment, so you can build out an option selling portfolio. It takes about a year, I believe, to become really a kind of like an expert at this thing, because again, we're not trading all day long. We're only doing a handful of trades every single month that fit into our lifestyle. So if you want to learn more about that, take a look in the description of this video. There'll be a link down below. Guys, remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.